Welcome to the next lesson where we will complete the robustness testing. The first 3 tests have already been completed. First one, out of sample, where we looked at how the strategy behaves on previously unused data. Next, we tested the strategies on different markets to see how the strategies would behave on a different data structure, and we also tested them on 2 different time frames to see how the strategies will behave at different market speeds with the same structure. Today we are going to test the slippages and Monte Carlo tests. I have 77 strategies left after the last test in the last lesson. And before we start testing the slippages, please remember to set the default time frame H1 back right here or in the data tab. Now we can set up testing for slippages, and this will be at 5 pips. But what are slippages anyway? The principle is very simple. Here is the Nasdaq market in the RoboMarket platform. You can see that I have entered this line here, and this is the value that I would like to enter at. But it can happen that instead of entering at this level, I enter here, for example, and I get a worse execution, so-called slippage. I enter at a worse price, which of course affects risk, potential profits, and so on. And I want the strategy to work well despite such slippage. That's why we test for slippages. By default, we have the slippage set to 1 pip when we develop. This is a slippage that is average in our experience. Most of the time, slippage will occur, but it is minimal. However, we want the strategy to work with slippage of 5 pips, and we enter this value in the Data tab and set the profit factor and ranking to 1.1, and now we can start the test. Let's see how many strategies will pass, because usually all of them pass, but exceptions may occur. Here again, you can see how many passed and how many did not. Now we move on to the next test, which is Monte Carlo. We set up these tests in the cross-check tab. I will explain how they work just as soon as we run these tests. The first Monte Carlo test is called Monte Carlo Trades Manipulation. It's a fairly quick test that we use to run simulations only. In the test settings, we leave only the second line, randomly skip trades, and we set 200 simulations. This settings means a simple thing. It will randomly skip 10% of the trades and do such a simulation 200 times. Let's see how the strategy depends on a small sample of 10% of trades. In filtering, the setup will be a bit more complicated, but do not worry. First, delete everything what is set here by default. Now select Add Conditions and find Return Drawdown Ratio. We want this return drawdown ratio from the backtest Monte Carlo trades at confidence level 95% to be greater than or equal to. Now again, we are going to add return drawdown ratio to the right side, and it's return drawdown ratio from the main data, and we also choose apply percentage ratio at level 50. Once again, what we actually want. We want the return drawdown ratio from Monte Carlo Trades Manipulation at the confidence level of 95% to be greater than or equal to 50% of the original return drawdown ratio or of the return drawdown ratio of main data. I will save everything. I'm going to run the test and explain what it all means. To explain it, we have to wait for just one strategy, this one. I go right to the Monte Carlo tab. You can see several hundred curves. The thick blue one is the original backtest. And the other curves around, there are specific simulations. And what StrategyQuant does is it takes this list of trades 200 times and it always misses 10% of the trades. And it's those 200 simulations that you see here. Sometimes it will improve the results, but most of the time it will make it worse. And we want 95% of those 200 simulations to have better or the same results as 50% of the original. That is, in the case where we have a ratio of 6.88 here, we want 95% of these simulations to have a return drawdown ratio of at least 50%, which is 3.44. And in this particular case, you can see that 95% have a value of at least 4.55 or more. And that's what we want. That even in those situations, the strategies are robust and resilient enough. This is the basic filter that we use here. And why actually 50%? First of all, it's something that we have verified from history, and we also know that we can count on really half the returns. So if we deployed this strategy in a live environment, we know that in the backtest it earned $6.88 for every dollar risk. So I can count on $3.44. But this is like kind of the worst scenario. I hope it's clear how this works. And as always, if any strategies failed, simply delete them. Another test is also Monte Carlo, the so-called Monte Carlo retest method. In the cross-check tab again, turn off the first Monte Carlo test that we've just done and turn on the second one. In its settings, select only the last line, randomize strategy parameters. The number of simulations should be set to 30, probability to 20%, and max change to 20% also. The filtering will be identical to the previous test we did. So, return drawdown ratio from, and now it's different, it's from Monte Carlo retest method with a confidence level of 95%, must be greater than or equal to 50% of the original return drawdown ratio, of the return drawdown ratio of the main data. I will run the test again, and again I will explain its functionality during the testing. Note that this test is much slower. That's why we are choosing only 30 simulations. This test will do 30 simulations, and for each one it will do a separate backtest. If you have an average laptop, it's really going to take a while, so you can get comfortable. It's gonna be around, I don't know, 10, maybe 15 minutes. So make a coffee or stretch yourself or have a snack. Don't be in too much of a hurry. I have a very powerful personal computer, so in my case, it's going to take like maybe 2 minutes. And just for you to know, usually not many strategies will pass this test, but we will scale it up gradually to tighten the conditions to get to a reasonable number of strategies if we have a lot of strategies left, because sometimes it can happen that you are left with, 40 strategies or 80 strategies, and it's too much. So I'm going to wait for the test to be completed, and then we will continue. So my test is completed, but if yours is still running, feel free to pause the lesson and turn it on when you have your strategies tested. When I take a look at the strategies that did not pass, I can see that those results were significantly worse. But what do these results tell us specifically? When I look at the source code tab for this particular strategy and switch to pseudocode, I can see what the strategy does. We already showed this at the beginning of the course. Each strategy is given certain parameters. For example, here I see that the strategy uses this parameter with this value. And we want the strategy to be functional even if this number is about 20% lower or 20% higher. That's 20% we set in the test settings. If strategies are fixed like this to only one number, they usually don't work with any other value, and that's bad. Such strategies are extremely sensitive and do not work in a real environment during live trading. So this test is very important, and if the strategies do not pass this test, absolutely uncompromisingly delete them. Once again and simply, in this test we can see for every single simulation how the strategy behaves with the different settings, with the different indicator values that we see in the source code. The full list of parameters used can be easily viewed by clicking on parameter variables in the upper right corner and then choose recommended parameters. Now you can see the whole list. Again, just reminder, don't forget to delete strategies that didn't pass. I know that this is a procedure you already know intimately, but repetition is the mother of wisdom. So click on Tools, Select, Failed, Delete, and OK. In my case, this number of strategies made it to the final round. The best quality strategies are usually the most simple and have relatively few parameters. At this point, we would manually go through the strategies, and I would select the strategies to deploy to the test account, or I would do even more strict robustness test. And why not actually do such a more strict test right now? If you have a lot of strategies, it's certainly good to know how to filter out the best ones. But please take this as an example and like some kind of bonus only. Personally, in this case, I prefer to choose the last test. So I set not 20%, but 30% probability and max change. So this will reduce the number of strategies even a little bit. I will run the test and we'll wait for the results. Then we will go through the strategies and I will give you some tips on what strategy we would take and deploy on the test accounts ourselves. Now I'm going to show you what we would use to decide which strategy to deploy to the test account. And by the way, we are showing this extra test here in case you have too many strategies left over. Just remember that. At this point, we've more or less built the strategies. I've got a few left, but I just want to pick some that I could deploy to the test account. Tomorrow, we are going to have a webinar where we will show you the bonus workflow. You will learn some interesting things and get some common question answered. And then we will get right into deploying the strategies to the test account. Now back to work. In the first step, I will sort the strategies by return drawdown ratio from the most profitable to the least profitable. I'm interested in how the strategies behave when the markets are underperforming. I will look at the equity chart of the strategy and recall the worst years in the market over the last few years. So late 2018, where there was a significant 20% correction, then 2021, a big drop in March, and 2022 markets are not doing too well either. But you can see for yourself that this strategy worked well in 2018, also 2020, 21. 22 is not so glorious, but here we have a new high. So I would not be afraid to deploy such a strategy on a test account. To such a strategy, I would look for other strategies that are not so similar. For example, another 2 or 3, maybe just one. And at this point, I would go through the strategies I have here and delete the ones that are clearly similar at first glance. If you don't feel like doing it this way, like going through the list, and you would prefer a more automated approach, do this by selecting all the strategies, clicking on Portfolio, Merge Strategies, and clicking OK. Simple like this. This step creates a portfolio which you can find here in the list, usually at the bottom. When you look at the equity curve of this portfolio, you can see what the strategies would look like if you were to trade them essentially all at once as one portfolio composition. But we don't want that, we just want the most interesting ones. So I will switch to Portfolio Correlation, select Correlation by Month and Correlation by Profit and Losses in the top left corner and click on Compute. I wait a moment and get the correlation of the strategies in the portfolio. As you can see for yourself, some of them are worth very high indeed. Most of the strategies are similar. We started from 500 strategies at the beginning, so no wonder. The correlation tells us how similar the strategies are to each other. The lower the number, the better. The more green, the better. We want the value to be no more than 0.4. As I mentioned, from the strategies from the list, I would deploy this one. It doesn't pass the more advanced test, but that doesn't bother us too much. That's strategy 249136. I have to find it in the list, and now I have to find a friend to go with it. For example, this one has low correlation, 136177. And I will also mark it for selection right away. And as you can see, it failed the bonus test. After that, this strategy would also go 137102 and 140122. I have 4 strategies selected now, from which I will again create a portfolio. So I click on the portfolio, Merge Strategies, OK, and that's it. I have to find it in the list of strategies, and again I set the monthly correlation just like before. You can see for yourself that these 3 strategies have a fairly high correlation to each other. So of the strategies that I've selected for the portfolio, I'm going to select just one. And how do I decide? By the value of the return drawdown ratio. In the overview, I see this value, and logically I will keep only the strategy with the highest return drawdown ratio and of course the original one. Again, I'm going to combine these 2 strategies in one portfolio. I open the portfolio, go to the Portfolio Correlation tab, and click on the Compute button. you can see that the correlation is very small and the strategies complement each other well. This is what the equity chart looks like, which is much better, and the return-driven ratio has grown nicely to 1073 just because we've appropriately combined the two strategies. If we look a little lower in this chart, we can see that the strategy is in profit more than $2,000 this year. With that said, the maximum risk is about $1,500. So we could deploy this portfolio on an account of about $5,000 with a 0.1 lot position. But if we wanted to deploy a smaller position of 0.01 lot, $500 would be enough. But we will get to that in later lessons. Now what's next? Now you not only know how to select the resulting strategies, but we've even built a portfolio of 2 test strategies to deploy. You too will now build your portfolio, which will have 2 or more strategies. Please save your selected strategies. I will show it again here just to be sure. Select the strategies you want to save. Click Save. Save to StrategyQuant format and choose a location on your computer where you want to save your strategies. When you want to load the strategies, simply do so using the Load button. I will show you this specifically in the next lesson. And that's actually all for today. It's been quite a lot, so thank you very much for your attention. Please remember that we have a webinar coming up in which you will get a new workflow. I'll show you a more efficient way of building strategies, a way that will save your time, so you will definitely like that. And that will be also a surprise. And of course, if anything wasn't clear to you, feel free to email us at lab@strategyquant.com. Have a great day, and I look forward to seeing you next time.